And it's time to do business again. This time we'll do 55 minutes of business round the world and looking at the economies. And here's what we have prepared for you today. In South Africa, there's a threat of potato shortage. We'll tell you about that on the program. And tea export is helping Kenyan shilling. It's threatening at this time. And some changes to that reform in Egypt. That's coming from the IMF. Good afternoon, welcome to the program. This is Business Incorporated on Channels Television. I'm Ini John Mekwa. We start from the global space as we always do. We start from oil. It rebounded on Wednesday after a sharp drop in the previous session ended a three-day streak of gains as investors have whipsawed between concerns about potential supply losses from Libya and the Middle East, as well as worries about global fuel demand. We keep our eyes on the number. We see a 25 cents is what was added to Brent. That's after it lost that $80 level, $79.80 a barrel. That's what we have for Brent at this time, 0.31% up, while WTI from the United States is 0.23% in the green, and that places the price at $75.70. Yes, so the factors moving the market now, markets are supported by industry data released late on Tuesday, showing that United States oil and fuel inventories fell last week. That has supported. However, the biggest risk remains the potential loss of supply in Libya, where about 1.2 million barrels per day of production may be shut in amid a political dispute between rival government factions in that country and an escalation of the Israel-Gaza conflict to involve militants in Lebanon and forces from Iran. And Iran is a key Middle Eastern producer. There's also still been no confirmation of any closure from Tripoli-based government or from the National Oil Corps, which is in charge of oil resources in Libya. Still in the global space now, metals, gold prices slipped on Wednesday as the dollar ticked up again, building on the previous day's gain, while investors await a key U.S. inflation report, which is due later on this week, to give more clarity on the size of a likely September rate cut, which we've been talking about. Now, let's look at the numbers. We see spot gold is in the red, down 0.4%, $2,514.11. So we see that it's still retaining that 2005 record high that it hit a couple of weeks ago. U.S. gold also down 0.2%, $2,549 per ounce. Spot silver 0.7% down, $29.28 per ounce. Platinum is on the flip side. It gained 0.3% in the last couple of hours, $956 per ounce, while palladium is back in the red, 0.6%, $966.40 per ounce. So as we said before, the index, the dollar index went up 0.1%, and of course that makes gold less attractive to holders of other currency. And then traders are fully priced in that easing of interest rates in the United States, which is expected next month. Now let's come to Nigeria. The Federal Inland Revenue Service has established a 12-man anti-corruption and transparency unit. They call it the ACTU, and it's to promote accountability within the agency. The unit, inaugurated by the Independent Corrupt Practices and Other Related Offences Commission, that's the ICPC, is tasked with ensuring zero tolerance for corruption in tax collection. The FIRS chairman, Mr. Zak Adedeji, through his representative, emphasizes that their role is crucial in maintaining public trust in the tax system. The ICPC has pledged its support to the FIRS ACTU, highlighting the unit's responsibility to monitor and improve the agency's processes, ensuring ethical conduct across all corporations. We're still in Nigeria now. The Nigerian Electricity Regulatory Commission has granted 6 states in the country the authority to regulate the electricity market. In a statement posted on its X page, the electricity market regulator listed the states as Enugu, Ekiti, Ondo, Imo, Oyo and Edo. Now, NERC explains that the new regulatory measure can be referred to as the order of transfer of regulatory oversight of the electricity market to the State Electricity Regulatory Commission. So instead of NERC, then we have SERC for those states. The commission earlier announced in April that it had handed off the electricity regulatory oversight of Enugu, Imo, Ekiti, and Ondo power companies with effect from May 1, 2024. Now, you may have seen that video. There are reactions still with the Premium Bread Makers Association of Nigeria is assuring the public and all stakeholders that its members adhere strictly to the highest standards of food safety and quality in the production of bread. In light of recent unfounded rumors and misinformation, they call that PBAN strongly reiterates that no unwholesome or substandard materials are being used for the production of bread by any of their bakeries. The association assures that all members strictly comply with regulations and guidelines set forth by the National Agency for Food and Drug Administration, NAFDAC, as well as other relevant regulatory bodies. They're assuring that every ingredient used in the baking process is safe, wholesome, and meets the highest quality standards. Now, still in that line, talking about bread, NAFDAC has come to say, well, they're not involved in that video that suggests that Nigerians should not or should avoid bread because of use of saccharin by some bread makers. NAFDAC emphasizes its stance that the use of saccharin in bread is not permitted under the Nigerian Industrial Standard, as well as the Codex General Standard for Food Additive. It also states that the agency has not advised Nigerians to avoid bread produced in the country. And we're still in Nigeria. Fostering more connection to accelerate the realization of Nigeria's economic potentials is the driver for the International Business Conference organized by the Lagos Chamber of Commerce and Industry. For the first day, members of the international community, captains of industry, as well as the governor of Lagos State, Mr. Babajide Sanwo-Olu, were in attendance at that event that held yesterday and concludes today. Invest Nigeria Expo for 2024 is an initiative of the Lagos Chamber of Commerce and Industry in collaboration with the Ministry of Foreign Affairs as well as the Federal Ministry of Industry, Trade and Investment. For LCCI, the conference is pivotal towards stabilizing the economy and driving sustainable economic growth and development.
I'm confident that the connections made here at Invest Nigeria will lead to fruitful collaborations and significant investments that benefit all parties involved. Nigeria is strategically positioned by the size of the economy, the population, and central location as a gateway to the African market.
His Excellency, the Governor of Lagos State,
Lagos State Governor Mr. Babajide Sanwo-Olu is here, and for him, driving a sustainable economic growth requires development of infrastructure.
Our administration has implemented and continue to implement policies and initiatives that will attract investment, retain investment, and let investment flourish and grow in our country. We're building the largest logistics food security hub in the whole of sub-Saharan Africa. We see and we realize that we need to feed the over 20 million population that we have. And we say to ourselves that one of the ways to secure the tomorrow is to make sure that food security, which is one of the major security challenges that we have in the world, Lagos can build a logistics hub that can keep almost 90 to 120 days of supply on both dry and foodstuff. And so we're looking for opportunity and collaboration, as we complete that investment and ensuring that, we can keep Lagos safe, we can provide for the needs of Lagosians, and we can use agriculture as a strong, enabler on that.
Even more reasons for investors to look the way of Nigeria, especially the blue economy. The minister outlines attractions.
I encourage the business community to take advantage of the incentive, such as the Pioneer Status Incentive, which grant tax holidays up to 5 years for businesses in strategic sectors. Others include a range of tax incentives, such as exception of interest on loan, deduction for research and development, reconstruction investment allowance, and rural investment allowance. There are also trade and investment promotion incentives into which investors in the marine and blue economy can tap. They include free transferability of capital returns, protection against nationalization, and recourse to international arbitration.
The International Business Conference and Expo Invest Nigeria, which is holding on August 27 and 28, is, according to LCCI, set to strengthen partnerships with the international business community and tell the world that Nigeria is open for business. All right, so now let's head into our conversation mode now. We're with the Executive Director, Risk Management at Fidelity Bank, Mr. Kevin Ugoke. He's right here in the studio. And this brings our mind back to what happened I think that was last week, where we saw the aviation sector get a boost in Nigeria, particularly Ibom Air. Ibom Air, they received their second Boeing 220. Added to their fleet, and of course they're very proud of it. And guess what? Fidelity Bank is also behind that. So let's delve into that and some other issues in the aviation sector now with Mr. Ugoke here. Mr. Ugoke, good afternoon. Welcome to the program.
Thank you very much. Thanks for having me here.
Good to have you. So one would ask, what's Fidelity Bank looking for with Ibom Air?
Well, I think you have to start by looking at the sector itself, the aviation sector. And first of all, it's a significant contributor to the GDP of the country. It's about $1.7 billion annually. That's one. Secondly, it's a significant employer of labor. Over 240,000 people employed directly, not to talk of the related employments from related services that go with it. It's also, I would say, a key connector of the economy to the global system. So definitely, it is an important aspect of. And if you look at its role in domestic movement, it's playing an increasing role. Between 2021 and 2022, there's been a 40% growth in passenger traffic through our airports. And in 2023 alone, you had about 15 million people that used our airlines across board. So all that is very important. And leading into that, you see more of our domestic airlines investing more in fleets to take advantage of the opportunities. So as at close of 2023, you had over 120 fleets among our airlines. So that just tells you the importance of this sector. So for us as a bank, you can't ignore such an important part of the economy. So we took a strategic view and decided on how we want to play in that space. And that's why we're where we are today, supporting Ibom Air and a few other airlines. Air Peace is another one that we support. And so far, it's been a good experience for us.
So we're hearing suggestions from AMCON of a possible merger of Aero and ARIC. I wonder if Fidelity will also be looking that way. I mean, I think it's still at the suggestion phase now, looking at the debts and all of that, which is why AMCON comes in.
Yeah, in fact, what you've said is not peculiar to the aviation sector, because in every sector and at every point in an economy, there are good players and there are bad players. There are some that come out well, some don't, okay? Now, for us as a bank, our role is to carefully select how we deploy depositors' funds to finance different players in different sectors of the economy. So if you look at the aviation space in particular, we have been very particular about who we finance. We've carefully scoped the environment and chosen a few good players to support. And we are quite pleased with what we are seeing so far. Certainly there will be, just like in any other sector, there will be headwinds. There will be some that will not do so well. And part of the remediation measures could be to merge. That's possible. It's a possibility. Now, for us as a bank, what we try to do is when we see any of our customers having a tough time, we try to find how do we work with you to come out of that, to successfully transit through that tough time and come out on a good landing at the other end. So that net, we are both winners. The bank is a winner, the customer is a winner, the overall economy is a winner. Yeah.
So you've said it, the aviation sector now, I don't know, we see a lot of airlines are not are not able to cope with the challenges, we look for more as customers. I believe if there's more supply, it might reduce some of those challenges we have, late flights and, and all those disappointment. So how do you see us forging to a place where we can conveniently say, I have a flight for this time, and then the flight actually takes off at that time?
I totally agree with you. This is a very significant issue. And I think it kind of typifies the kind of challenges that the sector as a whole is facing. And that's reflecting on the quality of service. There are certain things they can control, some other things they can't control. Now, if you look at it from a big picture point of view, one of the challenges that they have is high operating costs. And when you have high operating costs, it has so many downline effects that could ultimately affect the quality of service delivery. Okay, so one, the airlines are vulnerable to exchange rate movements, unfortunately. We don't have an effective hedge for that yet. Then secondly, you have diesel costs, or let's call it fuel costs, not diesel, jet fuel, correct, fuel costs. That's also quite high there. And of course, the operational efficiencies around our airports themselves. All of those things are some of the challenges that airlines face. And because of that, it definitely, at the end of the day, affects the quality of service that they deliver. So hopefully one day we'll get to that point where we can be rest assured that...
Do you have any suggestions? We know that our Minister of Aviation, Mr. Keyamo, is really active, even though in recent times we haven't been hearing his voice, but he's been really active since he got into office. And we've seen some efforts to cleanse the system, and take out some, illegal activities right there. So if you were to suggest on what to do now, what do you think could be maybe the first 2 steps to bring some kind of sanity and reliability into our aviation sector?
I think one of the first things we could do is to upgrade the infrastructure that we have. First of all, if you go to some of the major touch points as far as the airline industry is concerned, like Lagos, Abuja, upgrade infrastructure, I think that's going to be very key. Then 2 is improve on the security services around the airports, so that 1, you give confidence to both domestic and international users of the airport that there's good security around there. And I think very importantly is policy consistency. That's really very key. Maintain some stability and give everyone a sense that things are going to be stable. That enables long-term planning, both for the domestic airlines and for any potential investor, as well as for banks that want to finance that sector.
Yeah, it seems that issue of policy inconsistency is a common one, a common thread that runs through a lot of sectors in the country, unfortunately. But thank you so much, Mr. Kevin Ugoke, Executive Director, Risk Management at Fidelity Bank. Thank you for your time.
Thank you for having me. Thank you.
All right, now let's take a break. When we come back from that break, we'll head to the market with Aniti Edet. Stay with us. Welcome back. Still watching Business Incorporated on Channels Television. We head to the markets now for a red market report with Aniti Edet.
Yes, good afternoon, Nini. Well, couple of about an hour ago, before we had that green number, we were, the market was actually trying to climb straight up into, maybe climb higher than the 96,000 points, which you mentioned in Tuesday's trading session. But just a couple of minutes ago, when I checked, the market reverted back into the negative territory.
Yeah.
So that means that there's some profit taking by investors at intraday. So, but let's take a look at the bigger picture of other major markets around the world. But starting off, as usual, with Nigeria stock markets, the NGX ASI, well, it has gone back into the red, but this was the last figure that we had, about 0.25% in the green at intraday, 96,743. But this number has gone down to about 96,300 and still oscillating back and forth. But let's just hope that it's able to maintain the 96,000 points, which it got back to, because at some point it fallen down to about 95,000. But we're looking now at the JSE, where we see intraday numbers in the red, 0.05%. That's for intraday numbers. On the other sides of the markets for the continent, we see Egypt in the green, 0.88% at 30,631.25. And for Kenya Stock Exchange, for the close of Tuesday's trading session, down by about 0.43%. And that's it for the markets on the African continent. And now we'll talk about Nigeria's financial markets. And this time we'll be looking first at the fixed income markets. It's a combination we're having this time. For the fixed income market, we saw the Treasury bills market as well as the bonds market. We had a bullish performance there yesterday. And then at the same time, we also will be talking about the OMO auction that was carried out about 2 times this week. First, we had one on Monday, and then the second one we also had on Tuesday, which is the central bank carrying out that mop-up activity. And then this is coming in the midst of improved liquidity as well as a FAC inflow into the financial system. So, but the CBN carrying out this this OMO auction just last week. We carried out they carried out the Treasury bills auction, and this time, as we count down to the end of August, the CBN just intensified this. But to give us the details about this latest auctions by the central bank, that's the OMO auctions, let's have our analyst for today, financial market analyst Nabila Mohammed with Chapel Hill Denham. Thank you for joining us, Nabila.
Good afternoon. Thank you for having me, Anita.
Okay, so my very first question, because I have about 4 questions if time permits me to ask you. My first question is, why is the central bank coming with this persistent OMO auction, and at the same time also coming at a rate higher than the Treasury bills auctions carried out last week?
I mean, the last time we saw an OMO auction being floated before yesterday, or should I say before this week, was sometime towards the end of July. And ever since, system liquidity has improved, and that is why we're seeing the CBN coming up to mop excess liquidity. I mean, we're still in a tight monetary policy stance, and if the system is awash with liquidity, it will not be surprising to see them float an OMO bill, and that's what happened yesterday. We did see them come to mop up excess liquidity, and they exited the market with over 750 billion naira in terms of sale, because most of the interest, of course, were skewed towards the 1-year OMO bill, and that was what we really saw yesterday. Last week, on average, we saw system liquidity, in a net long position, and if we even recall how last week's auctions panned out, there were strong subscription levels, and as you rightly said, all these the FAC inflows, coupled with coupon payments from some of the running bonds in the market, influenced or improved system liquidity, and we did see it remain in a net long position all through for most of the part of last week. And it just explains the reason why we are seeing the CBN coming to float OMO bills to mop up excess liquidity in the system.
Okay. All right, so now that takes me to my second question with you, which has to do with the equities market. On Monday, we saw the Nigeria's GDP coming out, and coming out kind of stronger. We saw the ICT, where the broadcast media as well as telecom sector is part of it. It was the 3rd largest contributor to the GDP, was up by 4.4%. So now we have the likes of MTN Nigeria as well as Airtel Africa listed. Now, they've been having some difficulty or some challenges, but they were able to contribute largely to this GDP report. So now, what can you tell us about these sectors?
So really, the telecom sector is, as you know, an interest to the government, or very much interest to the government, and there are a lot of regulations in there, unlike the manufacturing sector that they can easily just increase prices just to manage the current high inflationary environment and its attendant impact on their performance. The telecom sector cannot do that without seeking the approval of the federal government. That's in terms of increasing tariffs. So that is one of the challenges that the sector is currently facing. Another challenge is, of course, with the issues around FX and how it has impacted their earnings since the devaluation of since the liberalization of the currency last year. However, we are seeing them take some steps, and for MTN, for one, what we notice is that they have renegotiated some of their their tower leases with the IHS towers, and that is a positive news we believe will positively impact or improve their earnings going forward. So aside that, there's also the issue around NIN SIM linkage that has, made most of these telcos to block and a number of Nigerians that are using their line. So there is revenue constraints because of that, and all these are some of the challenges that the sector is facing. In fact, intraday, what we noticed is that MTN is currently down around 6%, and that's as of today. And it's just, given that we have a positive outlook on the company, it is still a time for investors to take position, given that the future is still bright for the sector.
Quite interesting, Nabila. I think we'll leave it there, and then, of course, have a focus on other markets across the globe. Well, thank you so much for your time on our show, and do have a nice day.
Thank you so much.
Nabila Mohammed, equity financial market analyst with Chapel Hill Denham. And now, we won't be able to take Middle East markets, but although we do have it there, just a blip there, major markets across the Middle East were in the red. That's both for the Abu Dhabi, the Dubai, as well as Saudi Arabia and the Qatari Stock Exchange. But let's move over to the United States, where we see major averages there. They were mixed. This is because investors are actually awaiting the earnings report from NVIDIA. That's the tech giant there. What you might also call it the AI giant. For U.S. markets, we see the Dow Jones Industrial Average just negative flat at intraday, or not really intraday. You call it the stock futures. That's well before the market opens Nigerian time, 2:30. For the S&P 500, 0.05% in the green, and Nasdaq 0.08%. So now year to date, the Nasdaq is up 9.4%, while the S&P are roughly around 18%. Now, but for a summary of what we had for Tuesday's session on Wall Street, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market had slight gains on Tuesday, as the Dow Jones was up at 0.02%, the S&P 500 up at 0.16%, and the heavy-tech Nasdaq also up at 0.16%. It is clear that many investors are watching to see what the end of the week's earnings report will say. Companies like NVIDIA, there's great hope for, and other artificial intelligence companies. Investors are still hopeful that they will see major gains despite the rough start to the month of August. Investors are also watching to see if Chairman Powell will really cut interest rates in the near future, as last Friday's report showed there could be some interest rate cuts sooner than expected.
That's our Washington correspondent, Maria Bird, with the numbers from Wall Street for the close of Tuesday's trading session. So I wouldn't be able to give you that number for the Asian market, but most of the markets they ended with mixed sentiments. That's because they reacted to Australia's inflation numbers.
All right, thank you so much, Anita. Well, let's go to Europe now, where Germany has been running on mostly sustainable energy. That's what we have seen. That's the renewables. And solar power is the biggest of the mix. However, that doesn't necessarily reflect on the success of German companies that are having in that field. Lars Holter now joins us from Berlin and has more details about this. Lars, good afternoon.
Thanks for having me, Ini. So indeed, there is some good news. It comes from Germany's largest maker of solar cells and modules, Meyer Burger. That company, which is officially headquartered in Switzerland, by the way, has just announced that it will keep producing in its factories in eastern Germany, specifically in two cities in the states of Saxony and Saxony-Anhalt. It's a surprise since the company had originally decided to abandon these two locations and move the business to Colorado Springs in the United States. But those plans they have just announced have been abandoned. The move, they say, would have been too expensive. It couldn't be financed, which is kind of late for Meyer Burger to recognize. The company had already found a spot there, a former Intel chip factory, and had already even contracted with companies to help turn it into a production center for the solar industry. Well, for now, the company is staying with its production sites here, and while one of three factories factories they used to have has already closed a few months ago. 2 others are still operating, and the firm is now staying with the plants where they have been producing heterojunction solar cells and photovoltaic modules for 3 years already.
So why did they want to leave to start with?
Well, shares in Europe are doing okay this morning. Asia is a bit weaker, but all eyes are on the US once again. But it's not for economic data or interest rate talk today. It's about NVIDIA. The chip maker will have its quarterly report out, and some analysts are expecting that the company might have doubled its revenue over last year's quarter. Now, NVIDIA chips are specifically targeted to be used in AI applications. So that's, of course, one of the hottest sectors for the economy these days. And it's also why we're likely to see some action in markets after those numbers are out.
All right, Lars, thank you so much for that. I wonder, talking about Germany, because the Prime Minister of the United Kingdom is in Germany even as we speak. And Juliana will tell us what to expect, what conversations. I think top on the list of conversations to expect is Brexit. I think they're trying to mend fences or trying to, recreate some lost relationships. But let's have Juliana now join us to tell that. Hi, Juliana. Good afternoon.
Hi, good afternoon. Yeah, you're absolutely right. So Sir Keir Starmer, the Prime Minister of the United Kingdom, has been in Germany. In fact, I think he's just left. I've barely had an opportunity to have a glance at this story, actually, although I did see pictures of him, I believe, arriving in Paris. And it's all part of kind of the post-election victory tour. Of course, we know that apart from across the pond in the US, we have very strong allegiances with Europe, particularly because, of course, Europe is still facing a significant war between Russia and Ukraine, and the B word, which you've mentioned, Innie, Brexit. That's really the foundation of the discussions. Rishi Sunak, his predecessor, really did try his best, I think, to clean up some of the mess that was put in place by his predecessor. Well, he's twice removed predecessor, because of course that was Liz Truss, Boris Johnson. But I think Rishi Sunak was mostly focused on what was happening on the island of Ireland and the protocol and the Irish Sea. However, I think from what we've seen in terms of this engagement over the past few days, Sir Keir Starmer is really focusing on mainland Europe and shoring up those ties. A lot of the deals that we tried to forge, Kemi Badenoch, who's now running for leader of the Conservative Party, she was the trade minister at the time, and she again put in lots of efforts trying to forge new relationships outside of Europe. Nothing really came to pass. So I think for Rachel Reeves, the Chancellor, and for the UK Prime Minister, making sure that the relationship with Olaf Scholz, the Chancellor, and Emmanuel Macron, the French Prime Minister, is solid. I think that's their main mandate. That's why he's there.
All right, thank you. I'm sure by the time he's back, or even before he's back, I'm sure you get more information and we'll settle on that. But let's head to the markets now. What are investors' sentiment?
Not great at intraday. The all shares down 0.01%. FTSE 100 is up 0.01%. FTSE 250 down at 0.18%. The British pound is trading down against the US dollar by 0.31%, up against the euro by 0.15%, down against the Japanese yen by 0.03% at intraday. Thank you so much, Juliana. Enjoy the rest of your day. Thank you. Now, let's head to Africa now. We begin with South Africa, where citizens or residents there will have to pay more for fish and chips. A nationwide potato shortage sparked by severe weather conditions is set to drive up prices. And fresh produce distributor M&R Marketing, based in Cape Town, they've issued a notice confirming that major retailers are bracing for the impact. Despite having multiple potato producers, South Africa is struggling to meet demand. The shortage means that the cost of potatoes and frozen chips will rise significantly between now and the end of September. Wando Shilobo, the chief economist at the Agricultural Business Chamber of South Africa, explains.
significantly across South Africa. And the major driver of this is the lower volumes that farmers are delivering across various fresh produce markets in the country. And farmers are delivering less volume because of the poor harvest in some areas. And one can think of this as a consequence, in part, of load shedding that negatively affected the irrigation areas, and the crop quality was affected negatively. And of course, the fact that some of the harvest is just less in various regions. We see, for example, that the market in general is dominated by Western Free State and Limpopo. That's where the large volumes are coming from. And we think that throughout October, one can expect that potato prices will remain elevated. It is only around about November, towards the end of the year, where we think that we may see a recovery in the volumes of the fresh produce, of the potatoes at the fresh produce market.
And to Egypt, where the International Monetary Fund, that's the IMF, has announced a review that it has eased several conditions in its $8 billion financial support package for Egypt, which include allowing Cairo more time to carry out the necessary reforms. Egypt and the fund previously agreed on a package in 2022, but the fund has repeatedly delayed disbursement on the grounds that Egypt has not met its condition, such as committing to flexible exchange rate. This new review involves easing some of the fund's criteria and is part of the 2 reviews that the IMF conducts every year before disbursing funds. Though approved back in July, the latest review was only published on Monday, and it marks the 3rd of such review for Egypt and follows after the package was increased back in March. The IMF says Egypt could forgo quarterly fuel price hikes in exchange for a firm commitment to raise prices to cost recovery levels by the end of 2025. The review was originally slated for approval on July 11, but after Egypt raised fuel prices up to 15%, it was delayed to July 29. In its statement, the fund says it has approved the 3rd tranche in late July and that inflationary pressures are gradually easing. The foreign exchange deficit has been eliminated and fiscal targets have been achieved, including those related to spending through large infrastructure projects. We head to Kenya, where, well, the shilling is threatening, doing good a little on Wednesday, with foreign exchange inflows from tea exporters slightly outweighing month-end demand from the manufacturing sector. This morning, data shows that the shilling was going at about 128.25 and 129.25 compared to the US dollar, compared to what it was before, which was about 128.50 at the close of Tuesday. At the beginning of August, the average price for Kenya's tea exports rose for the 3rd month to hit 335,000 shillings. That's about $2,351 for a ton of tea, and that was in May, and that's the highest in nearly 8 years, driven by a weak shilling and increased demand for the beverage. Data from Central Bank of Kenya shows tea export earnings grew 33% to 16.17 billion Kenyan shillings. That's about $113.34 million in May, the highest since March, up from 12.17 billion shillings. We're still in Kenya. Bolt, a leading e-hailing business, has implemented a 10% rise in pricing across all ride categories in Kenya. Bolt's general manager for rides, Linda Ndugu, revealed the revised pricing, and according to her, the raise is intended to provide equitable compensation while improving working conditions for its driving partners. This news comes more than a month after the nation's e-hailing drivers began a protest against unfair rates and hefty commissions collected by the app providers amid a dire economic climate and exorbitant cost of living. In 2022, Kenya's e-hailing regulatory agency, the National Transport and Safety Authority, ruled that e-hailing business receive a flat 18% commission. While the rule sparked debate and complaints from corporation, they eventually caved in and agreed to comply with the guidelines. In Zimbabwe, a Zimbabwean lender, Time Bank, has proposed a syndicated loan of $35 billion to help the government liquidate its external debt and compensate former farmers whose land was expropriated over the past decade. The bank says that the loan will, among other obligations, pay the country's $20.4 billion foreign debt, $7 billion to black farmers that lost their land without compensation before independence in 1980, and also $3.5 billion to the white farmers whose land were taken over in the past 24 years. The bank has submitted a proposal to the President, Emmerson Mnangagwa, and is awaiting its proposal. And of course, we'll also follow up and see if the President will approve this. It's time to head to the crypto space and see what's happening right there. And we turn to the board and see another red board today, just like yesterday. $60,000, $207.93 is the price of Bitcoin at this time after it lost almost 4%. That's for Bitcoin. So it's still a red one, but I mean a shade darker than that. We see Ethereum lost 5%, just there, 5 at 2,540.95. That's Ethereum. BNB also in red. Cardano, Solana, it seems to be a red market. Doge. We're waiting inflation numbers, I think, from the United States. And of course, we're still counting down to the expected cut next month. Next week is next month. So we're looking at that. And well, we'll find out from Gilbert to see what's driving the market at this time. But other than that, there's some trending issues. I think boycott Binance is one trending hashtag. I wonder if you've seen it. We'll delve into that also. Binance has seized all Palestinian crypto wallets. All of them, after a formal demand by Israel. We'll also delve into that. But first, let's find out what's making the market so red this afternoon with Gilbert Jokpata. Hi, Gilbert. Good afternoon.
Yeah, greetings, Ms. Zaini. Good afternoon.
Yeah, so why is the market so red? I thought at least we're stabilizing. We're expecting the cut, expecting the inflation number will further tell us the direction of the cut, you know, but why do we have this much red?
This is because investors are snake bite careful, and you know, the conviction of the uptrend needed to be tested, and this actually includes major earning reports that will be coming in this week, which include that of Nvidia. You know, it will be coming out today, and also the PCE data. You know, even though we know that the summer is almost over and we'll start seeing the rate cut from next month, the market needed to be tested. You know, but then it was a question of, will we have a breakout or will we retest the support? But it appears that investors decided that we have to test the support, and that's what's happening.
At this point, Gilbert, I have lost. What's the resistance point at this time? Do we have a new one? Are we trying to find one?
Okay, you know, there is so many things about this particular market which you could actually compare with that of 2016. If you look at the charts, they look almost the same. We are following the same pattern where after the bull run began, after a while, we had a correction to about 25 and then 30%. And that's what's really happening. And that of 2016 that you could compare with this is that we're headed into an election. And that is what is happening this time around. After Bitcoin had proven 16, 17K as bottom and then 24K as the beginning of the bull run, I think this is the zone where some investors and the major market makers always use this summer period to take some short-term profits before, you know, some upward continuation always occur afterwards. But then I think this upward continuation is going to be major when we look at the fact that US is already considering making Bitcoin part of their strategic reserve. When you also look at the ETF, you know, and also look at the more of mainstream adoption of cryptocurrency. I even think that even though we are following the pattern of 2016, which actually was a prolonged bull market, I think that we may have that same prolonged bull market this time around, but then I think the surge afterwards, once we have a break up top, will be even more intense than that of the 2016 bull market.
So at this rate, it does seem like the market has already priced in the rate cut that is expected, and so it may not make a lot of difference. And I guess the next thing is we'll start counting down to the election in November.
Yeah, I could agree that the market is pricing in that, but then I can still debate it. How much has it priced in, and then we are still range bound. I think more of what we've had is that you know, there was a zone during the range where manipulation used to come in, so we are no longer trying to test that particular zone again. But what I rather think is happening with the market pricing in a couple of thing is that there's more investors' confidence right now.
All right, so let's look at what's happening in Palestine. What's going on there? We see trending boycotts, crypto, and that in Palestine that all of the crypto wallets have been seized. What's going on there?
Binance came under heavy fire, you know, with the boycott Binance on X, and there was this accusation of freezing of assets belonging to Palestinians, the Palestinians, and then it was that it had the best interests of Israel. And the co-founder of Paxful, you know, he came out majorly as well with this, and then we have seen the circular of Israel to Binance. That actually tells us that this organization was asked to be defunded or frozen because they were alleged that they were funding terrorism. But then addressing the boycott Binance, especially in the context that involve national security concern, I think it requires a more balanced approach. Acknowledge the concerns of the crypto community. You know, many people feel that freezing of assets, especially in the decentralized industry, goes against the ethos of crypto, which, you know, we value freedom, privacy, financial autonomy. But then freezing assets, it looks more of a breach of the fundamental principle, you know. But there is a context of this, which is the concern of national security and then preventing terrorism financing. And then we need to understand that centralized exchanges have a role. You know, just like Binance, they are more of the intersection between the traditional finance and then the crypto world. And they are required to comply with international laws and regulation if they must continually to serve the global market. And this means that at times, it may be necessary for them to do things that, and it will be necessary for them to do things that are not popular, you know, with the cryptocurrency market, you know, so that they could be in legal compliance and as well as long-term sustainability. Don't forget, last year they already fined a 4.3 billion for failing to comply with U.S. anti-money laundering and funding terrorism. So at this point, I think security is as important as decentralization. To me, it's a double-edged sword, and then a balance is essential for the future of the crypto space. I am more like at this point calling for a dialogue and then a transparency between you know, crypto communities, exchanges, and regulators. We need to find a middle ground. The conversation should be on how we can uphold the value of decentralization while we also ensure that crypto is not used for harmful activities. So to me, instead of boycott Binance, I think we should be pushing more for a constructive solution. We could be advocating for a decentralized dispute resolution mechanism or demand for transparency and governance from exchanges, more of a governance transparency. I think this way we could maintain the integrity of the crypto space while we still address some major and legitimate security concerns.
Do you think that perhaps, because Binance is getting bashed, I think they're the biggest exchange, you know, so they get bashed from almost all countries now. Do you think perhaps they need to be more in talks with governments of different countries that could see them avoiding some of this bad publicity?
Okay, first of all, I've spent over half a decade in this industry, and there is one thing that I always see. The bigger an exchange starts getting, you know, the more they start getting bad. And that was why you will see so many exchanges that was trying to like blow up like Binance, you know, they used to stop somewhere. And why Binance initially, you know, they were moving their headquarters and trying to go to more favorable crypto countries or countries that are more favorable vulnerable to cryptocurrencies. Binance is at the point where it's too big to hide. Like, where do they want to run to? They can't hide anywhere. Like, they have become a major cornerstone of the industry in the world. And at this point, I think what is necessary is more for them to be more compliance with regulation at this point, because exchanges like this are more of the neobanks. They are more of the neobanks. They are more like a bridge, like I said, between traditional finance and then the cryptocurrency world. So compliance is very, very needed for them. I think this is the best thing they must do. But then the issue they have as they are trying to now be friendly with governance compliance is that they start doing things that to the cryptocurrency community feels like it's against the core fundamentals of our industry. But then this is where I think that there should be call for more logical conversation and an understanding and a balance between the cryptocurrency community, the governance and transparency in exchanges, and then also regulations. We just need a balance at this point, and Binance have always been a leader in the industry. I think they could lead that conversation at the same time, or talk with major KOLs at this point that will lead, the crypto community to understand that, look, they are no longer the kind of exchange they used to be. They need to comply with international regulation, but yet there have to be a balance to this.
But how are the crypto community in Nigeria? How are you guys responding to this trend, this boycott Binance trend?
Well, the thing is, the Nigerian crypto community is a very big part of Binance International. But at this particular point, Yusuf, who is the co-founder of Paxful, considers himself a Nigerian. He even has a Nigerian name. So this is more like a Nigerian who was actually pushing for, Binance taking this initiative. So I think there is still kind of a Nigerian thing to it, but then I think that in our local community, our local industry here, we have our personal concern, we have our major concerns, which why we still follow up with what is happening in the international space, which Nigeria is always part of. We also have to look more in our local industry. I heard that PoliticsToday, have received their visual license. That was after the Director General said that this month they were going to start, releasing this license, and I think that's commendable. We also have our own personal challenge. We also have our industry to build while we still play with our global counterparts.
On the global space, obviously, Gilbert. Thank you so much for sharing your perspective with us.
Yeah, thanks for having me.
Okay, so as usual, we end with the crypto in the crypto community and pick up again tomorrow. That's the much we can take on the program. I hope it has been worth your time. As usual, we promise to do better tomorrow. Hopefully, we'll do better than we have done today. So that's it on Business Incorporated. I'm John Mekwa. I'll see you for the stock market report. It's a red one today. I hope it changes before close of market, but do enjoy the rest of your day.